Good morning, everybody. Time for another recap on the market. So let's get into today's action. Today is all about the Qs for us. So the Qs had a pre-market algorithm today. Let's get a clear chart and really set this up so we can see everything start to finish. Okay, starting on the 5-minute chart. We're going to close down those for now. We had an interesting little algorithm this morning, which is great because we love these little pre-market after-hour phantom wicks. They end up playing some very good probabilities for us. We do very much enjoy them. So having an opportunity to see an algorithm in the pre-market is always four-funnel good. So what I do here is I take the 5-minute and I take it and I set up high-low. Okay, and the Fibonacci range, that is it. So this morning we had a pop to short outlook. Okay, so if we're looking at yesterday, our over under was near the breakout day of the front. Let's go to Q or SPY real quick. Our over under was the gap on SPY. I don't have it on Qs because it's not the same level. 511.75 for the markets. And once that had recapped as support, so it pulled back up, and once we maintained above this level at 511.70, we had opportunity for direction. Didn't matter which way it went as long as we were trending above that level. And this is what we always call for over unders. So if this is our over under level, you need some actual trend, lower high, lower low set for us to continue to that downside, or we need higher lows and higher highs to continue sets to that upside. And we got the upside momentum continuation, right? And then coming into this morning, boom, we had a opportunity to kind of flat break. Let's get this zoomed in. Just a flat price action, very sideways, broke back up, and then we had the volatile action. Now, it's cool because SPY versus Qs, and Qs is a little bit more of a laggard today. Generally, SPY is always the better trader, but the cool thing about this algorithm here is it gave us a sense of equip, right? So what you want to see here, we have a pre-market top that's already going to be resistance, right? And we know that the first tag of pre-market, whether it be low or high, happens to be a very good counter trend metric. So if you were going long into the pre-market high, there is a knee jerk, whether it wants to continue up or back down from there, it does not matter. The potential counter trend knee jerk is still there. So when something goes into pre, short it. When something goes into the pre-low, long it. Okay, and that's a scalp. It's not something for a reversal or anything like that. We just have a algorithm that respects pre-market highs and lows. So with this algo in the pre-market, we've seen price action. Here's our box. Okay, outside of the box came into resistance of pre-market. Now let's stack some catalysts here on the 5-minute chart. Whoopsie. Let's see if we can get back to that. Rip. There we go. So let's stack some catalysts here for our oscillation indicators. Now, right now, coming into, let's talk about all the reasons this was a pop to short. Number one, pre-market high extension came back down. Algorithm box right here. We'll redraw this because this thing is all over the place. Pre-market high. So we have an extension to that top side. Very, very heavy top side extension. Okay. We are hot on the RSI coming out of the pre-market. We have a MAC cross coming out of the pre-market top, right? So we came down, created the algo. The likelihood of the oscillation right here telling us that price action is going to go up is very little. We're looking for a pop to short only depending off the algorithm. So what do we use? We use the golden pocket, which is above or below the 50. GP. And after the golden pocket is either support or resistance, we go to one side of the fib. So this algo was created here, right? Let's do one more zoomed in so you guys can really see this. Was created here, comes up and down. Here's the full range to the golden pocket, 50, and went long. So I was long biased all morning to the top of the fib. This would be the bonus round, max resistance, because again, it's all telling us there are no hots, there's no nothing. We already broke through the 50. Let's draw that real quick on the RSI so we can see where that halfway point is. Okay, so here we already broke through that 50. So we're always looking for the counter trend to continue, okay? And the pop. So we held the golden pocket, ran to the zero fib. I was all out right here, came back up. This was bonus round of resistance, so on and so forth. Great, right? No big deal. And then we had the short. So confirmation, confirmation, broke, bottom channel. Confirmation of the cross was way back here at 7. So we are always looking for that short. So pop to short, right? That's what we need. So popped into pre-market. I shorted this all the way back down. And once something comes back, first tag, you heard me say that pre-market high or low. Same with the fibs. From the golden pocket and its creation point. First tag, short. First tag, long. Okay, we played both of these from one algorithm candle. That's all we needed. So I called the pop to short. We popped, we longed it, got out, cracked back inside the box, right to the golden pocket, a little static, all the way down. Then I longed it right here. Huge long day. Then right back up to where? 10 SMA. So we start using other indicators to stack catalyst. If we wiped out this dashed blue line, which is the 10 SMA daily time frame, it's just on our 5-minute chart, we have this to be a back point. This is a break, test of Fibonacci, long, back test, aka confirmation. That was a great O. Confirmation. So we got a confirmation back test. Then what happened? Fell right back down. But what did it hold? 100 again. The market isn't ready yet. And why is that? The number one psychological catalyst for today is the FOMC, right? So we have catalyst of FOMC. So we know the market is usually trapped in a certain range before a large volatile late afternoon of FOMC. So ahead of the time coming into today, we already understand that psychological momentum, but it doesn't mean we can't trade these metrics. So right now we got kind of a bouncing ball short pattern. Breaks, holding fib, holding fib, holding fib. But notice we're getting lower highs, right? So if we reset this volume and let's take a look at our final indicator of the morning, and that was the VIX for me. This was the last part of that long play. So the VIX was coming up, 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 and it shuts down at 8:15, right? And the VIX was at an extension point. So why did I long pre-market? Look at VIX. 7:30, 8 a.m. It shuts down here, but VIX is hot, right? That was a huge catalyst for that long this morning, because when the VIX is hot like that, it obviously, needs a reset on indicators. So that's where that big pre-market came up, came back down, and then VIX was super hot. So I seen the algo be made. So I'm like, well, VIX is really hot at, let's see, 8:05, 8:15, it closes down. So let's check the chart. 8:05, 8:15, it closes down. So there's that long right off the golden pocket. So there's our second catalyst. Here's the golden pocket, support, VIX is too high. So what does that mean? We are at golden pocket support with another indicator on top of VWAP, 100 EMA hold, volume, so on and so forth. We have the VIX telling us that it needs a exhaustion reset. The VIX says, hey man, I'm not quite ready yet. Let's reset. VIX comes all the way back down to the pre-market, causes the pop. VIX finds support at cool RSI, slams down. All regulated within this beautiful little RSI zone, right? So that is pretty much the entire, we only played the Fibonacci today. And now that we're just kind of zooming here, we're just allowing it to work out and kind of do its thing back and forth before we get to the FOMC. So we're probably going to be trapped in this algo candle. And once we get outside of this algo candle, I'm still macro in the long-term short. You know where my targets are. I'm looking for the lows, so on and so forth. Let me get out of some of this short right here. I know where my buy bid button is. There it is.
Order filled. Order filled. Order filled.
Is that all of them? Okay, good. Sorry about that. Just killed off another 4K there on that short. Close. So we got some pretty fat P&Ls there today on market. One sec here. I got to bring up this group. Tradeabait's hard when it's all zoomed in here. There it is. Boom. Boomba. So I can grab this today. So some of our PA accounts here today, they're all grouped together as well. We got like 2,500, 2,700 on some, 2,400 on some, 1,000 on some, so on and so forth on the opaque. So we had all greens today as well, leading up to all of them together is over, I don't even want to say the number. It's really high, but it's very good. It's in a 5 digits. So having a really solid day with that. Now, with the rest of the day here, we're going to look for the FOMC. So let's make a prediction here. I think we're going to go down. So anything outside of the fib range and pointed to the downside of the algo, I think we'll hit to. And I think we're going to get a panic back down towards some of these levels. So I say stay short as long as we are maintaining resistance here 439.69. That is the top of the fib zone. We've already tested it. So I'm looking for a breakout of the 100 fib, back test of the 100 fib, or a straight meltdown. And we'll end up somewhere, with any luck, a really big short. Best case scenario, best case. Second scenario, this is target 2. We got about a 70% chance here. I like to use that for 2618. And I think we got about a 98% chance for the 1618 here. Pretty easy to stay short. So despite what all this does and whipsaw, it could go way higher than this. I'm talking about that volatile last hour. Let this thing set up. Don't try to play those nasty candles that do this. We're going to get a hopeful drain candle at the end like this, okay? So I think to the downside of this algo, we will hit the metric 432.27. We will hit the 435.78, most likely. Big bonus round if it closes way down by 433. Leave a couple runners if you want. But and now this is just prediction. If the market comes out, the FOMC is completely opposite, like we've been running on very poor data, so on and so forth. We have to just be very ready for that. But on the longer standing time frames that we've covered many times, we're looking at the weekly RSI, hot. We're surrounded in seller volume for the week right here. We have a ton of seller volume. We are coming off from the RSI. We're about that oscillation to the backside here on the weekly metrics. It's so heavy, so heavy. So even if we get one more little pop here, massively, we're still going to go for this gap over here. 425.73 is my positional short. So I'm still holding those shorts right here. We have all lower highs, lower low breaks here. Did a little bit of a retrace. We just needed to trend break, panic down, and I think we're still going to come back down to that 426. Inevitably sub 500 for the bigger pullback on SPY. So these predictions are still here from last week. Looking at the heavy low volume and high volume sell, low volume buy, high volume sell. And then, of course, the MACD and everything else. I think the RSI deserves to come back down to the 50 point on the daily, and that's where we can get this last lower high into a fresh lower low panic. And then, of course, we have a gap way down here, and I'm real big on 497.70s for SPY prediction to the short side. And again, I'll go back long when some of these hit. I'll start to get long. This isn't the doom and gloom quite yet until the end of summer in Q3, in my opinion. So let's go with that for now and tune in for the next video. In the next video, I'm going to go over how I set up Fibonacci's on the weekly, daily, and full set. This is just the recap. So tune in for the next. We'll catch you then.